Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is October 13th, 2025, and we are diving deep into Tesla, ticker symbol Tesla. There has been a flurry of news recently, from new model pricing to a major NHTSA probe, and the stock has been incredibly volatile. In this video, we'll break down all the latest headlines and then jump into the charts to see what the price action is telling us. We'll identify the key support and resistance levels you need to be watching, both for the short and long term. First, let's talk about the news, because it's been a whirlwind. Tesla recently launched cheaper versions of its Model Y and Model 3, which sounds like great news for boosting sales volume. However, the market reacted negatively because the prices were still higher than many hoped for, especially now that the $7,500 federal tax credits have expired in the US. This has led to concerns about future demand and whether these new models can truly move the needle without the government incentive. Compounding the pressure, reports broke last week that the National Highway Traffic Safety Administration, or NHTSA, is opening a probe into nearly 2.9 million Tesla vehicles over its full self-driving system. The agency cited numerous reports of FSD inducing traffic violations, including running red lights. This news immediately put pressure on the stock, as it raises safety concerns and the potential for a massive recall. On the other hand, the bullish narrative for Tesla is still very much alive, centered on its long-term potential in AI, robotics, and autonomy. Just last month, the stock saw a significant surge after Nevada's DMV approved the company for autonomous vehicle testing on public roads. This was a major step forward for the robotaxi vision. Analyst ratings reflect this deep division on Wall Street. The consensus rating is a hold, with price targets ranging from as low as $300 to Wedbush's bullish $500 target. The average price target sits around $360, which is actually a significant downside from the current price. We also see some bearish indicators in the fundamentals, like a very high PE ratio and significant insider selling over the last few months. So we have a classic battleground stock, immense long-term potential versus significant short-term headwinds and valuation concerns. Now, let's see how all this translates to the chart. We're looking at the daily chart for Tesla, showing all the action since mid-2024. After a strong run-up into the end of last year, we saw a significant pullback in early 2025, finding a bottom around $212. Since then, the stock has been in a powerful uptrend for most of the year. We can see it broke through several resistance levels on its way up, building a strong base. The price action accelerated dramatically starting in late June, pushing from the low 200s to over $400. The 52-week high was set just recently, tapping $488 on an intraday basis in mid-December of last year, though the recent 2025 high was closer to $470. Let's zoom in on the action from the beginning of September to get a clearer picture of the recent volatility. Here we can clearly see the massive green candle on September 12th. This 7% surge was a direct reaction to the positive news about autonomous vehicle testing approval in Nevada. The stock continued to grind higher, peaking at an intraday high of 470.75 on October 2nd. But since that peak, we've seen a very sharp and aggressive reversal. Notice the high volume on these down days, which suggests conviction from the sellers. The sell-off culminated in this massive red candle last Friday, October 10th. The stock gapped down and sold off hard throughout the day, closing down over 5%. This was the market's reaction to the double whammy of the NHTSA probe and the disappointment over the new, cheaper models. This candle broke through some minor support levels and created a new short-term low. To get a better feel for this recent drop, let's switch over to the 1-hour chart and look at the last week of trading. From this perspective, you can see the stock was trading in a range between roughly $430 and $450 before the news broke. The 430 level was acting as clear support, but you can see it completely collapsed on Friday morning. The price sliced right through it and didn't find any real support until it hit the $411 level late in the day. Today, we are seeing a bounce off those Friday lows, with the stock currently trading back up around $423. This is a critical juncture for the stock. The bulls need to see the price reclaim that broken support level around $430 and turn it back into support. A failure to do so could mean this is just a dead cat bounce before another leg lower. Now let's drill down even further to the 15-minute chart to see Friday's capitulation and the setup for today. You can see the intense selling pressure throughout Friday, especially in the afternoon. Each attempt at a bounce was sold into, which is a classic bearish sign. The price finally bottomed out at 411.45 right before the close. Today's gap up and move towards 424 is the first sign of strength we've seen in days. Short-term traders will be watching to see if the price can hold these gains and build a base above 420. The next minor resistance on this time frame is the 425 to 426 area, where the price consolidated briefly during Friday's sell-off. A break above that could give the bulls more confidence to push back towards the major 430 resistance level. Alright, let's switch back to the daily chart and recap the key takeaways and potential scenarios. Your key support level to watch is the recent low around $411 to $413. A daily close below this level would be a major victory for the bears and could open the door to a test of the psychological $400 mark. Below 400, the next major support zone is around $380, which was a consolidation area in early September. On the upside, the first major resistance is the $430 level we just discussed. Above that, we have resistance around the $450 level, and then the recent highs near 470. So, what are the likely scenarios from here? The bullish case, which I'd give about a 60% probability, is that Friday's sell-off was a climactic event that washed out the weak hands. In this scenario, the stock will build a base above 413 and gradually reclaim the 430 level. The long-term AI and autonomy narrative is very powerful, and dip buyers may see this as an opportunity. This outcome would be reinforced by any positive news, like the NHTSA probe concluding without a major recall or strong initial sales data for the new models. The bearish case, with a 40% probability, is that the recent news has fundamentally damaged short-term sentiment. In this scenario, today's bounce will fail, and the price will break below $413 in the coming days or weeks. This would be driven by continued negative headlines, broader market weakness, or growing concerns about EV demand. A break below 413 would likely lead to a test of the $400 and potentially $380 support levels. Things to watch for are any official statements from Tesla or the NHTSA regarding the probe, and whispers about Q4 delivery numbers as we get closer to the end of the year. These will be major catalysts for the next big move. So, in summary, Tesla is at a critical inflection point with strong arguments on both the bull and bear side. Keep a close eye on the key levels we've discussed, support around 413 and resistance at 430. Thank you for watching this analysis on Explain the Charts. As a final reminder, this video is for educational and informational purposes only and should not be considered financial advice. Always conduct your own thorough research and consult with a financial professional before making any investment decisions. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell so you don't miss our future breakdowns.